Welcome, ladies and gentlemen, to the virtual roadshow of Swiss Resource Capital and Commodity TV. My name is Jochen Steiger. I'm the founder and CEO of Swiss Resource and also the founder and chief editor of Commodity TV. And we want to present you today, famous Osisko Metals, one of the top 10 zinc developers in the world. And you see already Robert Wears here, the CEO and executive chairman of the company. Robert, good morning to Montreal. How are you doing?
Very good. Very good. Good morning to you.
Fantastic. Thank you very much. And we will do the presentation in 1 minute. Just people are checking in here. That's fantastic. And just some rules and regulations upfront before Robert starts with the presentation. Of course, we are fully complying to European, Swiss, and also Great Britain data security law. Nobody can see each other and nobody can see any emails. And also important, please use the chat function after Robert's presentation or also in between already, if you like, to ask questions. We will answer them, especially Robert will answer them after his presentation, which will start now. So I will set up, and I see already still people are checking in here. That is great. And I think, Robert, let's get started. The floor is yours, and let me bring up the presentation. Voila. Enjoy the show. Good. Thank you very much.
Thank you very much, Jochen. So welcome everyone to this virtual presentation, a webinar of Osisko Metals. Just as background, Osisko Metals is essentially the base metals arm of the Osisko Group. For those of you who do not know us, we're a mining development group of companies based out of Montreal and Toronto. We have several projects mostly focused on precious metals, but Osisko Metals itself is entirely base metals, was created 3 years ago to focus on upcoming opportunities in the base metal sectors. We are very bullish on base metals, especially in a post-COVID environment. We believe that we are starting a long-term bull run in the base metals, largely due to the fact that there has been lack of investment in base metal space now for a couple of decades. Global reserves are dropping, and with resurgence of the government stimulus, especially in the infrastructure side, we believe that there'll be a strong demand for metals such as nickel and zinc. On the copper side, of course, it's the conversion and move towards electric vehicles, which should create a very strong demand in the copper space. So let me focus on Osisko Metals itself. The usual disclaimers. So the takeaways from the presentation today is, again, decades-long divestment from the resource sector is currently leading to global base metal reserve depletion. We are particularly bullish on nickel and zinc. This is a sustainable situation that is currently right now further constrained by obviously COVID-19 supply deficits. But in a post-COVID environment, as the economy shifts towards a greener, more sustainable structure, this will create a very strong demand for base metals. We are focused on zinc because we're particularly bullish on zinc. Global reserves are dropping faster than other base metals, and in the project pipeline, it is very thin globally. Very few, only a handful in development projects in the world. We believe that Point is one of the best zinc lead projects currently in the development stage globally, and it's located in Canada, which is, of course, a very safe jurisdiction for mining. Our milestone last year, we completed our first PEA, which is preliminary economic assessment of the project, in order to decide whether we should go ahead. Of course, with further development, and the numbers are very encouraging. This was released in 2020, based on a long-term zinc price of $1.15 US a pound, which we believe is quite reasonable. The study yielded an after-tax net present value of $500 million and internal rate of return of just shy of 30% at 29.6. So for us, these are excellent numbers, and is encouraging us to proceed with developing the project. And included in the PEA was a capex of a Canadian 555 million, which under the mining scenario that is envisaged in the PEA would give us a payback of 2.8 years, and essentially based on an average annual production of 327 million pounds of zinc and 140 million pounds of lead. This would potentially make Pine Point one of the top 10 zinc producers in the world. And all this at an expected all-in cost of 67 cents a pound zinc. So very encouraging numbers. But before giving more details on Pine Point, let's say a few words about the zinc market and where we believe it is headed. So, of course, zinc is a very basic base metals. It's used 60% of global consumption goes straight into galvanization. So vehicles, steel, everything that touches essentially construction, infrastructure, and transportation industry that needs to be rust-proof. So if you want to talk about sustainable development, zinc plating and galvanization is a key to making all steel products much longer lived. In a world without zinc, well, this is what you get. So even if you consider the switch to EV vehicles, nobody is going to want to drive a rusty electric vehicles within a few years. So except for high-end vehicles, which are switching to aluminum chassis, steel chassis that are galvanized is still going to be the norm. In North America, we have a very aging infrastructure, dominantly built in the 50s and 60s, and we're seeing across North America government spending on rebuilding bridges and roads, especially materials that were built using old steel non-galvanized structures. So just in Montreal last year, in the last 4 years, we've seen about $12 billion Canadian in infrastructure reconstruction. And all of the steel parts that went into this reconstruction, including the Champlain Bridge, was galvanized. So we expect zinc demand and consumption to remain strong. And in terms of greener markets for zinc, I'd like to emphasize the fact that the most viable battery right now for grid storage globally are basically zinc air and zinc hybrid storage facilities. These are large, very large batteries. They're container side. 2 companies in North America now market them. And the reality is, in terms of solar energy and wind energy, for these renewable sources of energy to be cost efficient, we have to find ways to store that energy and redeploy the collected energy into the grid when the energy is required. And right now, large-scale zinc storage batteries are the solution. Lithium is far more expensive when it comes to large-scale storage, and we are assuming that most of the global lithium supply will be absorbed by the transportation industry. So zinc air and zinc hybrid battery storage is low-cost efficient and should allow for development of this new market for the green economy. So again, we believe that the issue is not consumption. Demand for zinc will remain strong. The problem with zinc is the supply. Again, we've seen mines, significant large-scale producers close in the last 10, 15 years. And there is very little on the development side, and that is the issue going forward. This is a presentation by Teck Corporation. Teck is the largest zinc miner and zinc supplier in North America. And last year at the mining show, the PDAC mining show in Toronto last March, they made a very interesting presentation. Teck is predicting a supply deficit, global supply deficit starting in 2024. We use numbers that are the numbers we use internally as Osisko are based mostly on CRU, Woodmac, and McKinsey research. And this is a picture that is basically developing for North America, which is, of course, touches us more directly since our project is in Canada. So based on these numbers, this is total production of zinc concentrate in North America from 2016 right through to 2025. So the lower part of the bar charts is entirely the Red Dog mine. By far the biggest producer in North America. It is located in Alaska, operated by Teck. And the Red Dog mine produces 50 to 60% of all North American production. So a very important producer. All the other mines in North America, much smaller producer, relatively speaking, they're in constant decline. We've already seen the closure of the Langlois mine, the Pend d'Oreille mine, the Caribou mine in Brunswick. And going forward in the next 2 years, two largest Glencore operations in Canada. These are long-lived camps that have been producing for over 50 years. That includes the Kid Creek mine and the Matagami mine here in Quebec, the Bryce McLeod mine. These mines are closing in the next 2 years. So all this is leading to a constant decline in production in North America. And projections towards 2024, we're talking about a 35% drop in zinc production going forward. And there's essentially nothing right now in the development stage to make up for that by 2024. There are only a handful of zinc development projects in North America, none of which will be in production by 2024. So this situation is quite serious and is, from an economic point of view, quite urgent to develop zinc projects and zinc mines in North America. So that's one of the reasons that we chose Pipe Point. It's an excellent project and has potential to be put into production relatively rapidly in the next 5 years. So it is a brownfield site. Cominco operated Pipe Point from 64 to 88, producing 64 million tons of 10% lead zinc. Now, keep in mind that most global zinc operations are underground operations, higher cost. Pipe Point is rather exceptional in that it always was and would be under our production scenario, shallow open pit for the most part. So that reduces production costs considerably, which is why even at our current grades right now in our resource model of about 6.5% lead zinc, it is very much economic. So it is located in the Northwest Territories, just north of the Alberta border. Here we have Edmonton. And basically easy access, very good existing infrastructure, given the fact that it produced till 1988. So road and rail access from Edmonton to the village of Hay River on the south shore of Great Slave Lake, and then paved road access right to the project site. So very easy access, and more importantly, we have the power station that originally fed the Pipe Point mine. It still exists. It's hooked up to a power dam to the south, which currently feeds electricity to Hay River and the village of Fort Resolution to the northeast. So we do have access to power, and again, the road and rail network. And when you're developing a base metal project, this is extremely important. Building a gold mine and flying out gold bars when you're completely isolated in the Great White North of Canada is less of a challenge, but you cannot put metal concentrate on a plane and fly it out. So it is absolutely critical to have road and or rail access from your mine site to the south, so that the concentrate can be sold to global markets through smelters. So the situation at Pipe Point is that we do have a solid infrastructure in place. We do have a preliminary economic study giving us very encouraging numbers. But personally, what I like the most about this project is that it will potentially produce one of the best concentrates in the world. Historically, Cominco in its heyday did produce one of the cleanest and the highest quality zinc concentrates globally, and our own metallurgical work has confirmed this. Pipe Point is an outstanding concentrate that will command premium pricing with just about any smelter globally. In the meantime, and I will get into the details of concentrate momentarily, what we want to do over the next year, so for the shareholders who are looking at milestones over the next months, we will publish or release a updated PEA at this time next year. And this year we're focused on better quantifying the numbers and the variables that will go into that updated PEA. We believe we can substantially increase the value of the project through targeted work in 2021. So 2021 work will be based on resource expansion and a conversion of inferred resources to indicated resources through a lot of drilling, additional metallurgical testing to optimize our current circuit, which includes a material sorting unit. It's based on X-ray material sorting, hooked up to a traditional grinding and flotation circuit. Most importantly, though, this year is hydrogeological studies. So one of the legacy issues from the old mine, and it's quite frankly a rumor that's in the market, but it is out there and it is weighing down on the share price. A lot of people believe that Pine Point closed down because of water flooding issues. This is entirely untrue, but we decided this year to put this rumor to bed with hydrogeological studies. So these, we're carrying those as we speak. We are drilling water wells into the system. We will be executing pumping tests and water tracer tests this year so that we can better quantify hydrogeology, and this will allow us to better constrain water management costs in the next upcoming PEA. In the current PEA, due to lack of information, the engineers assume pretty much worst case scenario, and there's a total of $370 million Canadian devoted to water management over life of mine in the current study. And that was split up into about $50 million in the CapEx, $150 million Canadian into the sustaining CapEx, and finally another 150, 160 that went into OpEx. These, in my mind, are outrageously high numbers for water management, and I'm very confident this year that we'll be able to demonstrate that water infiltration in the system is in fact a lot less severe than anticipated, and the next PEA will be able to considerably reduce those costs. So quick review of the numbers. I won't have time to go into detail, but again, the PEA was done at $1.15 long-term price for zinc and 95 cents for lead. We think these are quite reasonable numbers, and giving us our $500 million after-tax NPV and 30% IRR. With a strong annual production, life of mine of 10 years. I want to emphasize that our resource is actually currently at 50 million tons of material, but the PEA focused on the first 10 years of production, over 39 million tons of material. And that is largely because, unfortunately, in the base metal space, you have to do discounted cash flow models at 8% discount rate. So for all intents and purposes, after 10 years, whatever production you have has no impact on the NPV. So for a PEA, it makes more sense to just focus on the first 10 years of production and, of course, access the richest ore. So it does not take into account the entire resource base, but certainly the first 10 years of resource base. And this study was done at 39 million tons, averaging 6.2% essentially combined lead zinc. So where does that situate Pine Point as a potential producer globally? This curve is a summary of costs of all zinc producers in the world based on, again, WoodMac and SNL databases, which we have access to. So the width of the bar is the relative size of the producer, and the height is the total cost. So as you would expect, the larger scale producers have a cheaper cost in terms of pounds, cost per pound of zinc. In our PEA, that would situate Pine Point approximately on the lower side of the halfway mark in terms of global producers at a cost of 67 cents a pound all in. What's interesting about this curve and what it also demonstrates is that in the last 10, 15 years, since large-scale producers such as Century in Australia and Brunswick here in Canada have closed down, they've been replaced by a plethora of very small, high-cost producers, which are all up here, mostly in China. Well, even at a long-term zinc price of $1.15 that we projected, and zinc is currently at $1.20, these Chinese, many of the small Chinese operations are simply not economic, and we don't believe those are sustainable. So unless we see a radical rise in the price of zinc to $1.50 US a pound, which is not impossible, a lot of these high-cost producers simply will not last, and that will further contribute to the supply crunch in the next few years. Having said that, based on our production profile, which you see here, we would see a very healthy operation, which would peak in the third year at a production of about 450 million pounds of zinc. So once again, this could potentially make Pine Point one of the top 10 producers in the world over a 10-year period. The longer mine life would be based on some of the additional resources that were not currently brought into the PEA, and of course the potential to expand the deposit through new discoveries and resource increase. Very quickly discussing our processing circuit overview, we have approximately, the PEA was based on a production of 11 million tons per day operation, going through what we call a XRT ore sorter or material sorter. Obviously, this technology did not exist in Cominco days, so this would be bringing a new innovation into the Pine Point camp. And our testing has shown very, very good results. The objective here is to use a cheap method to separate ore before it feeds into the grinding and flotation circuits. So this is based on X-ray transmission, basically affected by the density of the material. Since zinc ore and lead ores are far denser than the host rocks, which are white dolomites, the testing that we have done has proven actually very, very efficient in separating waste from ore. So that results in the 11,000 tons per day of material being reduced to 6,700 tons per day material, which goes into the grinding and flotation circuit. So significant cost saving there in terms of ore processing. The XRT recoveries came in at about 93% zinc, very high for lead because, of course, lead is one of the densest ore minerals. On the flotations, we ended up with 92.9 and 94 for an overall recovery of 86.7% zinc and 93% lead approximately, with a significant cost saving again in the disposing of a considerable amount of waste material at the ore sorting stage. We do believe we can improve the recoveries of zinc, especially in the flotation cells, by doing additional testing with reagents on the cleaner side. So that brings me to the composition of the concentrate potentially. And this is really the beauty of this project on a global scale. Again, this would produce an exceptionally clean concentrate, which would be in high demand. So this is a slide showing the composition of the concentrate at Pine Point. On the blue side, on the left-hand side, we have compositions of Pine Point concentrate here relative to other producers in the world, major producers, including Red Dog, Rampura, Australian operations, MacArthur River, Mount Isa, and Peru, the Antamina operation. So in terms of total silicon, these are all impurities in the concentrate. In terms of silicon, iron, lead, and copper, these are common major element contaminants and concentrates, Point is way down there compared to the other concentrates currently on the market. On the trace element side, same thing. So now these bar charts include manganese, mercury, cadmium, and arsenic. Point is very low compared to other producers. So in fact, Point, from my experience, I have never seen a zinc concentrate that is so clean and pure. It's really very surprising. It's a function of the nature of the deposits and the geology, but really at all levels, Point is quite extraordinary. Especially because there's very low silicon and iron, it also means that the zinc concentrate being produced by inverse argument is very high in zinc content. So the concentrate grade would be running approximately 59% zinc, which is exceptionally high, much higher than most concentrates on the market. So why is this important? Well, the way the smelter industry works is through penalties. Smelters make their money by charging miners penalties for the contaminants they have in their concentrate. The Point concentrate is so clean, we do not expect smelter penalties. But more importantly, when smelters take on concentrates with impurities, they need to dilute those out because most smelters are faced, of course, with environmental constraints in terms of what they can put in their waste rejects. And also, there are technical limits to how much an impurity a smelter can handle. So the solution for a smelter is always to blend a dirty concentrate with a clean concentrate and process something that is chemically acceptable, which is why a smelter needs a reliable supply of clean concentrate to optimize its operation, and why Point is going to be in demand from all smelters in the world. So this is going to be a highly marketable product. And again, how do we get it to market? Well, thank God we have rail access from Point to Edmonton. From Edmonton, Canada, we're on the main Canadian line, which will give us access to the West Coast and the Eastern Seaboard. So there'll be no problem getting this premium product out to markets globally. And that's another tremendous aspect of this project relative to other zinc development projects in the country. So back to Point, and this is our property site. In brown, we have our claims or mining tenements. In red are all the deposits that went into our PEA study. These are the bodies for which we have our total resource of approximately 50 million tons. And right now, we're actually negotiating with the First Nation groups and the government to allow us to acquire more ground here to the northeast, which will essentially allow us to seal up the entire camp from a geological point of view and then increase our potential for new discoveries. The water issues that I was mentioning completely constrained to the west zone, and that's why we're dealing with it, where we do have some of the higher grade resources. But really, if we constrain our production to the old camp, there never were any serious water issues in the main camp here, and this is where we would focus. So basically, one main trend here, this is the heart of the original camp with the power station, the mill, and the town used to be. In blue, you see also, from an infrastructure point of view, very important, an entire network of haul roads, which are still available to us. They have not significantly degraded, and these would be used to allow us to put our operation or the Point camp back into operation. So again, very strong infrastructure and very reliable. Deposit types of Point, just very briefly, the mineralization is located within one geological unit called the Sulphur Point Dolomite. This is pretty much what Caminco mined out completely. Caminco was focused on the higher grade vertical deposits, which were called prismatics, completely ignored for the most part the tabular zones. We are focused right now We do have a number of prismatic deposits that were left behind. They're running 8 to 10% lead zinc. But we're also focused on developing the tabular zones, which are somewhat lower grade, around 4 to 6%, but they are quite extensive. And since those were not of interest to Caminco at the time, our resource expansion drill program will be focused on these tabular zones. And there are actually, right now in our resource model, 11 of those which are still open. Here's a good example, the N39 zone. We originally had a resource based on historical data, which was limited to the black outlines here. Our drilling has allowed us to expand the resource into the red outline. And I want to emphasize that this red zone is still open to the north. There's no drilling here. So there's ample opportunity still at Point to expand on the resource base simply by chasing the edges of the known deposits. And here's another example of two other deposits, the 011 and the 127 zone are still open. So a lot of work to do on the drilling side in terms of a resource expansion and resource upgrade from inferred to indicated. On top of that, there are still exploration opportunities and new zones in the camp. And this is an example of a number of holes which were drilled by Caminco at the end of mine life back in the mid-80s, for which there was never a follow-up, never detailed drilling. And these are significant intersections. We see here 5 meters at 21% combined lead zinc, 17 meters at 10.6 combined lead zinc. These all offer potential for discovering new mineralized zones, and we will certainly follow up on our exploration program over the next year or two to see if any of these offer significant new discoveries. On the First Nations and government sides, we have very good relationships. We've forged so far two separate collaboration agreements with one First Nation on the east side of the property, the Daninukuwe First Nation, and the Northwest Territory Métis Nation. We do have an existing exploration agreement, which was signed by our predecessors with Gatlodiche First Nation on the west side of the camp. And we're currently working with this particular group to bring them into an additional collaboration agreement. So these are important. It sets the stage for how we can proceed and explore in the area. It includes education, training, support, employment, and business contracts with First Nations companies. But more importantly, to the First Nations, in our agreement, we did agree to eventually sign an impact benefits agreement, which is fairly standard now in Canada, before you make a decision to go into production. And on the government side, in fact, in the last 2 weeks, I've received an update. Mining in 2020 was 30% of Northwest Territory gross domestic product. So mining very important to the government, and they definitely want to see Pine Point go into production as quickly as possible, because the government mining activity is mostly focused on diamond mines. Diamond mining in the territories is already a 25-year-old industry, and it's on its waning side. So going forward, there are only a small handful of development projects other than diamond in the territories, and I would say Pine Point is certainly one of the lead projects. So we've got very strong support from the Northwest Territory government. So to wrap up, again, base metal markets are actually, when I say 100-year lows, it's a relative 100-year lows. When you consider the S&P 500 base metal index compared to the total index, which, as you know, keeps flying higher and higher every day, you see that as a ratio, the S&P 500 base metals are actually, believe it or not, at 100-year lows. So there's never been so little investment in base metals. I believe that will change, but obviously in the last few years, we've seen a lot of cash inflow into pot, into new tech, into green tech, and the base metal industry is still relatively underfunded. But again, that has resulted in reserve depletion and it's not sustainable, and money has to flow back. Otherwise, we will run out of metals. We believe we're headed for a zinc production deficit in the next 3-4 years, and which is why Pine Point and other zinc projects will become key development projects for the base metal sector in the next few years. So to wrap up, Pine Point is one of the best projects, in my opinion, in Canada right now in the development stage for zinc and lead, of course. And we have excellent PEA numbers, which are encouraging us to further develop this. On the shorter term, 2021 will focus on resource expansion, water management de-risking, and environmental baseline studies. Just last week, we submitted our preliminary environmental baseline assessment as a first step towards permitting, and it was very well received by the government. In the next 18 months or so, we will be getting feedback from the government on the environmental side to refine how to proceed forward with permitting. So again, excellent project. If investors want exposure to base metals, and particularly zinc space, we believe Pine Point and Osisko Metals are key players in this developing market. Thank you very much.
Thank you very much, Robert. I stopped the presentation here. Let's go back to our normal screen. Great presentation. Yeah, I have a sip of coffee for sure, because it's quite early for you. Yeah, we have a lot of questions here, and I'm just looking. Maybe, first of all, can you give us a bit of a timeline to production? You just told us with the water issues, with the water study you are doing, that will be from here 1 year. Then you have to do, of course, a pre-feasibility, feasibility study that would cause, including permitting, I would say another 2 years probably. So maybe you can give us a short idea. 2026 might be an idea for production.
Well, okay, so to bring the project to what we call shovel ready, which is construction ready, we are looking at approximately 3.5 years. So that would involve a lot of drilling to bring the entire resource to the indicated measured category, permitting, feasibility, negotiations, IBA negotiations with the First Nations. And these are all the 4 main elements required to get us shovel ready. So once it's once what the production decision is made, we're looking about a year for construction. So totally, I would say it's 4.5 to 5.5 years for production.
Yeah, so around 2026 is, let's say, reasonable. Yeah,
it will be reasonable. And obviously, this mining is a long-term process. So, but again, in the shorter term, in terms of bringing value to investors, we do believe that as we develop the resources and potential always to make a new discovery, we do have several targets which could significantly impact the project. This will be done in the next couple of years with a significant amount.
Okay, fantastic. Then, of course, the question about the weather. Is Pine Point operable throughout the whole year? As we got, for example, in St. Gallen, we got already snow again here. It's a nightmare.
Yeah. Actually, there's less. The Pine Point area on the south shore of the Great Slave Lake is the climate is somewhat moderated by, it's a very large lake. So you actually have a climate that doesn't receive a whole lot of rainfall. And the temperature, well, it does get cold in wintertime, but keep in mind, the Cominco operated year-round there for 25 years. And if anything, it's a bit warmer now than it used to be. So operating there year-round is not an issue at all. In our case, the ore would be trucked to Hay River and put on the train.
Okay, super. Then a question about the Taltzen Dam. I personally like it a lot that you have a hydro dam here to produce the electric, because it's great for the ESG valuation also. But the question is, of course, has the Taltzen Dam to be upgraded then when you start production? Meaning, does it has already enough capacity?
It will require an upgrade, and the government is very keen on upgrading the dam, not just for us, but to supply additional power to the growing population. So we are in discussions with the government, and there is a plan to upgrade the dam, definitely.
Okay,
So
super.
all power requirements will be met within that upgrade program in the next few years.
Yeah, okay. So then we saw in your PEA approximately 555 million US dollars as a capex. Yeah,
Sorry,
let's
no,
round
Canadian.
it. Sorry, Canadian.
Yeah.
Sorry. So let's round it, let's say, to 600 million Canadian, just to be on the super safe side, as I did not see any contingencies, but probably you have them in already.
Yes.
So the question would be, how would you finance that? Because we see already Osisko Gold Royalties as a very strong partner of your company, and they have already a royalty. Would it be an idea to say, as zinc is going in such a shortage as you just described in your presentation, would it make sense to say, hey guys, we have the cleanest concentrate, why wouldn't we do an offtake agreement with somebody but on a premium and get, I don't know, 150 200 million dollars into the company?
Yes, that would be so. Obviously mine financing will be fairly traditional, a mixture of equity, debt, probably higher on the debt side. In discussions with many groups we're currently having, they're all asking the same thing. When are you going to finance your mine? There is actually a lot of money available. It's, believe it or not, it's easier to finance a mine build than it is to finance a development project. So on the mine build side, there's a lot of debt available. It won't be that expensive. Offtakes obviously is another traditional method of doing it, streams and so on. So it'll be a combination. It'll be a financial structure. It'll be a combination of all three. And obviously, since there will be a strong demand, there's no doubt that some offtake agreements will come into play.
Okay, super, because this would lift a lot of risk away and it's non-dilutive, right?
That's
so
right.
Always good. Super. What is cash in the bank today, and how much meters you want to drill this year? What is the budget?
We have 7 million right now. So right now the winter program is 3,000 meters. And we'll decide in April how we partition the rest of the funding. There is $1 million towards permitting right now, but we'll decide in April whether we raise a bit more money for drilling for the rest of the year. I would say worst case scenario, we might have to raise maybe 4 or 5 million to flow through this year to carry on with the drilling throughout the entire year.
Okay, super.
Yeah.
Where do you see the budget, let's say, for 2022, 2023, when you are really, let's say, pursuing those super important studies? How much would that maybe cost? Just to give us an idea. I know it's a forward-looking statement for the regulators, please, yeah. But just to give us an idea, do you need 10, 15, 20 million dollars? What might be the case?
Actually, for 2022, I would like to see a $20 million drilling budget. For sure.
Okay.
This quickly.
Fantastic. Then there is a question. Bob, you are personally a large shareholder and really have skin in the game. Can you comment on your holdings and other major shareholders?
Well, between Osisko and myself, we actually control 40% of the float, approximately, or very close to. I actually want to slowly raise my position to 20. Past 20, it becomes very difficult in Canada. There are too many constraints imposed by the stock exchange. Past 20%, you cannot buy on the market anymore. You can only take part in private placements. So I'm not there yet, but I'm getting there. And so, Osisko Royalties is at 19.8. We have some Quebec funds that own another 8%, I believe. So between now and the end of the year, we're going to effectively have a 48% control on the company, which is very important for us to carry the project forward.
Okay, super. Let's move a bit shortly to the zinc market itself, because you gave us some very interesting slides here, I must say. And I made also my mind a little bit up about the US infrastructure. And as far as I know, approximately 80 to 85%, because you said the bridges in Canada, in the Toronto region, I think it was, were really desolate. And as far as I know, 85% approximately of the bridges in the US are in the same status. It's a complete nightmare, yeah. So we have to replace them. Those are mostly steel bridges, of course, yeah. So do you have any idea about the quantification which might come in additional demand from, let's say, North American infrastructure to the market. Do you have an idea on that?
No, I don't, in fact. But in our projections, we're simply assuming that demand will be constant, as it has been the last few years. Mm-hmm. So if you assume 0 or maybe 1% growth, which is very conservative, mm-hmm. It still leads to a deficit starting in 24, 25, 26, depending who you listen to. But the deficit is inevitable. It's already too late because contrary to, for example, copper, if the world started feeling the squeeze on the copper deficit, there are major copper projects globally which are currently not in production. We know where the resources are. So if you just look at North America, for example, you look at Pebble in Alaska, you look at Resolution in Arizona, these are major world-class copper deposits, which are not in production for environmental or political reasons. Mm-hmm. But if, push comes to shove and the U.S. desperately needs copper, well, they will put those deposits into production. And it's not just in the U.S. There are major deposits in South America and Colombia, especially Peru. There's a whole slew of unproductive, non-producing copper deposits in Eastern Europe and the Tethyan Belt. So globally, there is no lack of copper resources. We know where they are. It's a question of proper economics and politics to put them in production. What is very different about zinc and also nickel more and more is that there are no sleeping resources. They just don't exist. There has been no exploration, no development. I can't point to a zinc deposit of 100 million tons tomorrow and say, okay, well, things get tough. Somebody's going to put this one in production. They don't exist. They're not there. And because zinc was always the most underperforming and boring of base metals, even though it's completely essential, it's been ignored. So since there's so few zinc projects in the pipeline, and that's what makes the difference. You have to look at the supply side and realize that there's just nothing in the pipeline. Mm-hmm. So again, assuming constant demand, we are going to see a zinc deficit because there are not enough projects in the pipeline to meet that constant demand. And we're dealing with closures. If, Kid Creek, Bracemac, Lady Loretta, all these fantastic zinc deposits were not closing down the next 3 years, it will not be an issue, but they will close down because they run out of reserves.
Yeah, absolutely. And I could imagine also due to those low zinc prices we saw in the past, there was definitely almost no exploration. So that's another problem because on the one hand, we say, okay, there might be new zinc deposits out there, but first we got to find them. We have to explore them. And then then you can mine them. So we talk from here, probably 15 to 20 years easily. Yeah. Yeah, and
Red Dog was the last major discovery. Sorry, Red Dog in Alaska was the last major discovery globally. Mm-hmm. Yeah, been very little since then. Yeah, so you're absolutely right.
Yeah, which is crazy. We saw also one slide with this new battery technology for the storage batteries, so those large batteries. Yes. Do you have any idea where might there be an impact on the, let's say, near-term future, maybe 5 years, which additional demand might come from those storage batteries?
Well, again, I don't have any reliable projections in terms of additional demand. It's purely a function of how fast we want to get away from coal and diesel, right? So obviously, a lot of the countries want to move into renewable energy, and especially coal-producing plants. But most of the conversion to coal, certainly in the U.S., is coal-producing plants are being replaced by natural gas. But California has made huge strides in replacing coal by renewable energy, so dominantly solar and wind. But again, the problem with solar and wind is that they only produce energy when the sun is shining and the wind is blowing, which does not necessarily correlate to peak demand, which is morning and evening. So again, the industry is aware of this. To make these alternative renewable sources of energy cost efficient, you have to be able to store the energy and deploy it at peak times. And so a lot of research has gone into large-scale storage. The two biggest competitors have been vanadium and zinc in terms of cheap large-scale storage, but I believe zinc will win because there's a lot more zinc in the world than there is vanadium. And even though we have to find more zinc deposits, the chances of finding a new zinc deposit is very much higher than finding vanadium. Vanadium is actually very rare. You do not want to develop an entire industry based on a metal which is quite difficult to find and develop. So I think storage is the future for grid storage. Absolutely.
How do you see the role of China in the zinc market? Because I could imagine China uses a lot of zinc because they have also a very, very large and fast growing car industry. That's one of the things. Also, construction is super great there. So how do you see the role in the zinc market of China?
Well,
on the supply side, also on the demand side?
Yeah, well, regardless of supply, as I said, a lot of the zinc in China is produced by small, high-cost producers, and China is an importer of zinc, and they will stay that way. How much more zinc China will consume, especially as they, develop their infrastructure, I don't know. But China will never become a zinc exporter. There's no way. We're just looking at an import scenario from now on.
Yeah,
so again, the qualitatively, all these numbers point to a growing zinc market, but in our modeling, we're just assuming constant demand, which is very conservative.
Yeah, as you just described fantastically in the last hour, your project and all the advantages you have. So the question is, a shareholder is raising here, do you have already standstill agreements with majors? Have there been majors on the project for due diligence already?
I can say yes, but I can't say who.
Of course. It was just an interest if there has happened something, because I could imagine a project of your size and quality, a lot of majors, given the facts we just discussed, they would be hungry and have some appetite to get it, right?
Well, it's not just the majors. Actually, it's PE groups, it's traders, producers. There's a whole host of interested groups, and it's the quality of the con that is attracting everyone, of course. So,
okay, great. Last question, because I think I checked all the boxes here. Same here. Where do you see the largest risk for your company? And 1 second. Now I lost the question here. Yeah, the biggest risk for your company. And how do you see, let's say, Osisko Metals within the next 2 years, also share price wise?
Yes. Okay. So if we look at backtrack in terms of risk, when we started the company, zinc was at $1.40, $1.50 a pound back in 2017. We got off to a great start. We were trading, we trade as high as $1.70. And then the zinc market, starting very beginning of 2018, boom, went into a bear market. That was triggered by the Chinese-US trade wars. So zinc just went on a downward slide, finally bottoming out at 82 cents a pound last March. So obviously our share price got dragged down along with it. The market completely lost interest in zinc. So even though we started off very bullish, we still are very bullish. We cannot foresee Chinese-US trade wars nor the pandemic. And so what we call those black swan events, which are out of our control, they do impact the market. And that is still a risk. Again, we think all that is behind us. We're getting closer and closer to a permanent deficit situation in zinc. But you cannot deny, obviously, it's about the market and it's about timing. The market has to become confident that base metal prices will keep improving and that this will not keep fluctuating, bouncing up and down like a yo-yo that discourages market investment. So I think in the next year, if we see, again, sustained strong base metal prices, including zinc, the market will come back and the generalist funds will start coming back to the base metal industry. I mean, there's just so many new tech companies that they can finance. eventually they're going to have to start looking at commodities again. And quite frankly, we're seeing it already. We're starting to get more interest from generalist funds. So I would say I'm very bullish right now, but we need to maintain that feeling and that sentiment. We need for zinc to stay, I would say, above $1.10 and or better, and it has to be sustained. So if that can happen in the next year or two, then I think this project's going to really take off. We plan on doing a lot more marketing. As soon as I can get my legs out to Europe, I want to do a lot of marketing in Europe. But
let's do so.
Yeah, well, I'm lined up for November, so hopefully COVID constraints will be done. I'll be in Switzerland in November. I'm keeping my fingers crossed.
That would be super.
We have to get away from these constrictions. Yeah.
Yeah, fantastic. And I mean, also you described it already a little bit with all those new technologies. I mean, also Bitcoin is a technology which is consuming zinc because they need so much, mining power with their computer and with all that, let's say, technical support they need to really mine those Bitcoins. So funny enough, they consume also zinc. But the question is now also, do you see any new technology on the horizon which could replace zinc or make it a little bit more competition?
Okay, so 25% of global zinc production is die casts and alloys. So especially on die casting, you can replace zinc by aluminum. So that is a potential source of demand destruction, but I would say that's maximum about 10%, maybe 15%. And then, not everyone, obviously zinc goes through the roof relative to aluminum. You might get companies switching to aluminum from die casting. But from a galvanizing point of view, there is no alternative, in my opinion. A lot of research has gone into galvanizing with other metals. There has been some success in replacing 10 or 15% of the zinc with other metals such as magnesium, aluminum, but it remains a small component. So I think galvanization with zinc or rust-proofing steel, which is what it boils down to, is here to stay. The other potential for demand destruction would be replacing steel chassis and vehicles with aluminum. Tesla is an aluminum body and chassis, but again, I think that is constrained really to high-end vehicles. The cost of making a car out of aluminum cast is considerably more expensive than a steel riveted frame that is galvanized. So you'll notice in the presentation, and when I'm talking about galvanization, there's a chassis of a car. It's actually a Volkswagen being dipped into a bath of molten zinc, and that's how it's done. The whole thing gets dipped into zinc and gets rust. And it's absolutely essential if you don't want to be driving a rust bucket, 3 years after buying a car. We all went through that in the 70s for those who are.
Oh, yes.
You want to betray their age? Nobody wants to go back there.
No, definitely not. I remember also we had a Renault which was rusty within 2.5 years. It was a nightmare. Yeah. Super. Okay, so we are ending the hour here really on time. Robert, thank you very much for a great presentation. Thanks for answering all the questions. And I really think Osisko is a fantastic company and you have a perfect setup. I wish you all the best. Thanks and hope to see you soon.
Okay, thank you very much.
Thank you. Yeah, ladies and gentlemen, that was our virtual roadshow with Osisko Metals and Robert Wers, the CEO and the executive chairman. And I think you really heard it very well with a $555 million project here. And in one of the best mining jurisdictions in the world, in Canada, fantastic infrastructure. The company has enough money for this year to really do their 3,000-meter drill program. Water study was just submitted in February, some days ago, to the authorities. And I think this is one of the best projects definitely in the world for zinc. The market is there. The market is going into a big supply deficit. This is exactly what you want when you have approximately 4.5, 5 years to open up your mind, because you want to go in production when the market has a real problem and not when prices are low. So we think zinc prices are rising further. That is also for sure. And don't forget the big infrastructure spending, also due to COVID-19 in the US, in Canada, in Australia, in Europe here. So a lot is going on. Zinc is one of the top metals, and don't forget about battery storage technology. So I would suggest you check out the company. Thank you very much for watching us. We will have next week here, same place, same time, Max Silver. And then we want to talk about silver, of course, from Mexico. One of the largest silver producers in the world is really ramping up. So we look forward to have you here. Thanks and all the best, and bye-bye.